Good morning, traders and investors. Steve Gans here with a weekend update and market outlook, where I take a look at the major indexes and how they're currently acting and what we might expect from them going forward. But you can see that over a significant period of time here, let me just turn on my drawing tool. We've been in a very solid uptrending channel in the SPX. Now, so that continues to largely be intact at this point. And you'll notice that here a couple of weeks ago, when we were right in this area, I said, if we break this resistance, we're likely to drop down to this support area. That was my expectation. Late last week, we did exactly that. We dropped down to it. We actually dropped through it a little bit. But by the end of the day, we had recovered significantly and we're back up in this general range. Since then, we rallied back up, and with technical analysis, one of the things we'll see is some common themes or common areas where when the market rallies back up, many times what used to be support here in this case, what used to be support can become resistance and can reject that back down. And that seems to be exactly what happened here. Now, I will also say that last week, light week with Christmas, next week, likely to also be a light week with New Year or a short week. We don't have lots of professionals in the market at this stage, so we're seeing that volume is way down on those current days. We had a big volume day here just going into the holidays where there was lots of maneuvering, lots of year-end adjusting, things along those lines that the big hedge funds and the market makers were doing. But again, we get down here to this week, very light volume. And I said last week, going into this week, and next week for that matter, that I don't totally trust any of the movements that we get during this week and next week, because they're largely fueled by individual investors. They're not necessarily fueled by what I'll call smart money or the big funds or institutions. So I certainly keep an eye on what's happening there, but I don't place a huge amount of credence on it. So my expectations for this coming week is that we're probably going to continue, chopping sideways within this range. Then as we get to the following week, again, not this coming week, but the following week, when all the traders and the hedge funds are back in full swing here at the start of 20. Then the movements we get, I'm going to place a little more credence on. I'm going to pay a little closer attention to them. That's where we're at right now with SPX. Again, nothing major, just looking at some sideways chop there, most likely. Then I also want to look at VIX, the volatility index. That also many times will give us some clues. And we'll see here on the volatility index, if we take a look at it, this is essentially a measure of fear in the market. The higher this goes, the more fear we have in the market. Right now, there just simply isn't a great deal of fear in the market. A couple weeks ago, we had that spike as our market sold off. But right now, we're back near pretty much all-time recent lows as far as volatility goes. So that, again, is telling us, you know what, there's not a lot of people buying insurance on their portfolios right now. And since there's not a lot of people buying insurance, that indicates that there's just not a significant amount of fear in the market. Now, let's look at the RUT index, which is the small cap 2000 index. Similar story here. It has been trading also in this very wide ranging channel for a significant amount of time. All indications are that I would expect this to remain in its channel. We see here that we did have what I would have called a support level right in this area that also failed there for a day or two. Then we rallied right back to it. Now it's acting as resistance. So if we do sell off from there, I could expect a sell-off back down into this area. If we get that sell-off again, I'm not sure we will. I would more likely expect us to maybe rally back up into this range and chop back and forth in this range here. But again, a break is not out of the question here. If that were to break, while it does come out of the channel a little bit, I would expect it to maybe come down to this level of support and then bounce off of that. We can see that at different times, these lines aren't perfect, but the few days that it did come outside of these general channel lines that I've drawn, it's rebounded back into that channel fairly quickly. That's what I'm looking at on RUT. And let's take a quick look at the volatility for RUT. Now that symbol is RVX, Russell volatility. And there's a couple different symbols here, so we need to make sure that I select the right one here. And again, very similar story we've got here in that we did have a spike in volatility when we had that big sell-off a few days ago. But now we're back down here to almost all-time lows in the volatility index for Russell, which also again tells us or indicates to us that at this stage, there's not really much fear in our market out there. At the end of the day, the market is looking pretty stable. I would say that I am neutral to bullish at this stage still. But again, that also is going to really be dependent on what the market looks like the first full week of January when the professionals, the hedge fund managers, etc., get back into their offices and we see what might transpire at that time. That's really going to be the full indicator for me. So with that wraps up our market outlook for the day. Thanks so much for looking in on it.